Welcome back to the Cup Runneth Over podcast, where we discuss truth, finance, and entrepreneurship. Our goal is to educate and help you live a life more abundantly. This is Colin. I'm here today with the guys, 1/3 of the podcast. Y'all go ahead and introduce yourselves.
What's good? Ruben checking in, another third. Hope y'all doing smooth today.
Yes, sir. What's going on, fellas? Samuel here from the ATL, just checking in, ready to give y'all some game. We got a great guest on today, man. I'm excited. He's got some good game for you guys, and we're gonna go ahead and pop it off. Not gonna take too long.
Yes, sir.
No doubt. Ruben, go ahead and tell them about our special guest for the day.
For sure. So our guest is somebody that me and Colin, we've known for a good amount of time. Had the opportunity to play college football with him up in Kentucky and just kind of kick it. I remember my freshman year, one of the first people I met, kind of opened arms, showed me the ropes, and we just built a relationship off of that, and it's been going ever since. Really smart guy, funny. I'm sure he's gonna make you laugh between a couple points of this episode. But wealth of knowledge, really good dude, down to earth. It's my good friend, my brother Connor Weaver out of Atlanta, Georgia. I'll let you introduce yourself, man.
Yeah, appreciate y'all, man. Man, it's Connor Weaver. I'm down here in Atlanta. I'm a young guy, 27, ATL brethren. Happy to be on, man. I think the Cup Runneth Over is an important podcast, man. I think from all areas, whether it's financially, spiritually. Ruben's on me about drinking water, man, and cutting out the dairy. So, man, I'm happy to be on, man. Happy to talk through any and everything. Like Ruben said, I played college football with him up at Center College. I graduated in 2016, and I'm back here in Atlanta working in commercial insurance. So really excited.
Yes, sir. And to go off of that, and we're going to kind of talk about, the stock market and building wealth and those avenues and how that can get done. And we's definitely going to break it down for us as well. And we get to know him as well. So
yeah,
I'll let you drop the disclaimer, my guy, Colin.
No doubt. Gotta clean up that cup. We're the Cup Runneth Over podcast. We're at the Cup Runneth Over podcast and not financial advisors. For financial and tax advice, please consult a professional. Ourselves, nor Mr. Connor Weaver, are responsible for any of your all's actions. The following information does not constitute any personal recommendations. This should be used for educational and entertainment purposes only. Now that we've gotten that out of the way, let's start filling up your cup.
There we go.
So yeah, about to say, you can just give us a little, backstory, your kind of experience in investing and just, what you do within your workplace.
Yeah, and I should say this too, right? So people hear Weave, they're like, man, is this guy's name Connor, or is it Weave, or is it Weaver? If someone affectionately knows me, man, my brothers, they call me Weave, right? My family calls me Weave. So just to clear for the listeners, man. So I say this, I'll take it a step back. When I graduated in 2016 from Center, I think growing up, I thought and associated financial wealth with simply going to college, right? And a lot of times we equate a college degree to a stamp, and that's our ticket, to become middle-class America, right? And, graduating college, quickly I realized if you have one source of income, you are one paycheck away from being broke, and so I think that certainly cultivated my interest to want to invest more. Back in college, I was in an investment society. And for me, really, it was just seeing, okay, I could put money somewhere and sleep and it works for me. My money has a job, right? And so back in college, I invested no more than $1,000 in the stock market. And I really didn't have a good pulse of what I was doing. And so really, when I graduated, my first 2 years, it was the financial knowledge piece. It was, listening to YouTube videos, trying to figure out what's a market cap. And then
I think we lost him for a second, but we'll get him back. But in the meantime, I think what he was saying about, experimenting in the market, even in college when, maybe the knowledge wasn't all the way there. Just, I had a similar experience, like investing in Apple and Amazon early in college. It helped me learn a little bit more about the market, even though I didn't really know about the market, but it helped me kind of get my feet wet, if that makes sense.
Y'all hear me?
Yeah, you back.
Yeah.
Hey, you back,
My
Weave?
bad.
Nah,
Now,
you
I don't know who
good.
that was trying to cut me out, man. Somebody wanted to keep talking, man. But
Nah.
yeah, man, when I graduated, I was really trying to just accumulate my financial knowledge, right? And trying to figure out, okay, how do I go from having one source of income, my earned income, my paycheck, to having passive income, right? Whether it was rental properties, royalty income, dividend income, interest income, you name it. And so that really started my interest into the stock market. And so even today, I look back, right? I think there's an evolution of your financial knowledge. Every day you have to be learning something financially, right? So that's really my interest into the stock market. I think everyone talks about financial wealth, right? And how do I get wealth? How do I get wealth? You could give anybody today $10,000. They cannot turn that into $100,000, right? It's the financial knowledge. And as a result of that, financial wealth comes, right? And so I think financial knowledge coupled with financial confidence is how we really get to financial wealth in our community.
I like that you mentioned also not just having that financial knowledge, but that financial confidence. So not only knowing what you know, but also being able to utilize it and being confident in what you know. So could you speak a little bit more about how you gained some of that financial confidence? I know you started some of your investing within college, and like you said, there wasn't much that you knew. So how were you able to kind of overcome any fears, if you had any, and just having the confidence to invest your own money and really putting your own money into the market at that point?
Yeah. I think everybody holds Warren Buffett as like this icon, this god, and he is, right? He is an investment, guru, right? He's not the only person, right? And his method of passive income, whether it's through dividends or just simply holding for 100 years, right? There's a lot of ways to make money in the stock market. And so for me, I would literally sit on YouTube and I was just searching like how to make money, financial success, market cap. Ruben, this, you've been in my spot several times, but like MSNBC, right? I'm always watching NBC, right? I'm always trying to figure out, okay, whether it's Jim Cramer, whether it's a Squawk Box, whether it's Final Trades, I'm always just listening on what's going on, because outside of it's a stock market, right? What goes on in the real world directly correlates and affects the stock market, right? So you think about COVID, right? And Ruben, you know this, and Cole, you know this as well. Delta, for example, when COVID hit in last March, everything shut down. Delta took a nosedive, right? People were selling their stock in Delta solely because business travel, personal travel was going to cease for some period of time, right? And I think for me, it's looking at, okay, what's going on with the economy and the world, again, directly correlates to stock market. Delta's a great company, right? Delta's not going to go bankrupt or cease to exist last March, but simply because of the pandemic, the lack of travel, again, people pulled their money out of the stock. So I think that to me was what, really got me interested in, the stock market, especially real world, right? And then, as soon as Delta stock tanked, I bought a lot of Delta stock, right? I bought a lot of Delta stock. And for me, we always talk about buy low, sell high, right? But it's also thinking about the future, right? So at some point, people will have some positive vaccine news, or people will start to travel again. And so I always understood that at some point, buying low and selling high is going to make me some money in the long term.
Hey, you mentioned market cap a couple of different times. So for our viewers out there who may not know the significance of a market cap, could you kind of break that down for us and let us know how it helps you, keep buying low and selling high and making sure you stay ahead of the curve? You know what I mean?
Yeah. So market cap, it's market capitalization, right? And so we think about, how do you actually see and show that you have equity in a company? So every company, no matter their size, has shares. They can be a publicly traded company or a private company, right? They have equity, shareholder equity, et cetera. And so market cap, in layman's terms, is the stock price multiplied by outstanding shares, right? There's a couple of things there to kind of figure out about shares. So if CRO and myself, Runneth and myself, we go public, we're going to hold some shares for ourselves. So that's all of our shares, right? We're going to restrict some shares for those founders, those day ones, the CFO, the CEO, et cetera.
Mm-hmm.
And so the outstanding shares is what's made available for everyone else to actually purchase and trade.
Now that's a good question, Sam. And off of that, you were talking about, out of college or even in college, being in an investment society, investing $1,000 while you were in college. Talk about how that kind of helps you build that investment confidence and even knowledge doing that early, even though you didn't know what was going on. Because I had similar experience when I got to college. I remember investing in Apple and Amazon, and I was like, man, like, all right, it's gonna do numbers. And then 5 months later, I'm like, all right, what's going on? I pull it out, and now I'm looking back with the knowledge I got now. I'm like, bro, that would have been crazy if I would have left that in there. So it's like, talk about, that experience.
Yeah. So I'll say General Electric, man, was until this day my worst investment I've ever made, right? And so I remember, growing up, GE is one of the largest companies, right? Manufacturing, they had their hands in aircrafts, everything at one point. And so their stock tanked when I was, I think, a freshman in college. And I threw $200 at GE thinking, it's at like $10. It'll get to 100 at some point.
Mm-hmm.
Little did I know, why companies' stocks drop. There's material reasons behind it, right? We may not know it today, but there is a reason why investors are buying stock or selling a stock, right? I didn't really understand the ins and outs, the volumes. I didn't understand the quarterly breakdown and looking at companies by their quarterly performance. And so GE, man, that money didn't do anything. In fact, I think I lost a lot of money over the 4-year span of investing in GE in college, right? And so I think having that kind of Band-Aid on my shoulder, like, man, like I lost a lot of money not knowing what I was doing. It kind of made me and forced me to try to go understand and try to learn and be better, right? And so whether it's $1,000 or it's $10,000, if I'm going to invest my money, I need to be confident about the stock, their C-suite, right? CFO, CEO, as well as their company performance, right? So, if a company has never made money in the past, I have to feel very, very confident that to make money in the future. So again, it kind of having that sore spot, having that loss going through college and investing, really made me want to kind of uptick, on my knowledge and not lose money ever again in the stock market, right?
Yeah. And I feel like that's a big thing that people kind of miss out on, especially with social media and meme stocks and cryptos, is like trying to make that money overnight. But you see like people that are successful, they take those losses in the beginning, but it's a learning experience. It's that Band-Aid you talk about, you never forget. So it forces you to learn and grow and not just throw money at something in hopes that it's going to go up, but you actually got the knowledge, you got the know-how, to kind of make the best educated guess, because that's really what it is.
Right.
But it's, you got some knowledge behind it. You got some fundamentals behind it.
Mm-hmm. Mm-hmm. Yeah. And I can touch on those right quick, Rube. We,
I was gonna say, yeah, touch on that, because I know some people might not know what fundamental analysis is or technical analysis is.
Yeah. And one thing too, I think before people invest or consider the stock market, right? Think about what you do every day. Think about what's around you. So for me, y'all know I'm a shoe guy, right? I'm an Air Max guy, right? So I was traveling a couple weeks ago, and I bought a couple $100 of Nikes, right? I bought a bunch of Air Maxes. At the same time, I put that same amount of money into the Nike stock, right? So people don't know, right? A pair of Jordans right now costs more than the Nike stock, right? So what are we really investing in? Do we think that tomorrow Jordan's gonna stop making Jordans? No, Nike's gonna continue to get the bag. They got LeBron as an athlete. They have all these brand ambassadors. And so I think for me, I think about, okay, next year, next 2 years, I'm buying Nikes. So I'm gonna invest in Nike, right? My girlfriend, I don't drink Starbucks, right? My girlfriend gets this caramel latte that's like $5, every week. She's paying Starbucks more she's paying me, right? I'm like, okay, hold on. She's putting money into Starbucks. Starbucks stock is like $90, whatever it is. I need to be investing in Starbucks, right? And so I think when people take that step back and look at, okay, what am I using right now, right? So y'all all have iPhones, right?
Mm-hmm.
Apple's stock is a tenth of what an iPhone costs, right?
Yep.
So I think that's, for me, is how I think about, okay, what's the company doing? Are they relevant? Are they here for today or for the future? Because that's definitely another thing too about growth. We got to talk about the fundamentals. For me, I look at their cash, right? Are they cash positive, cash flow positive, or are they burning cash to operate as a business, right? I think about their short percentage, okay? And this is the percentage of investors that thinks that the stock is going to decrease in value in the future, right? I look at, how much debt they have, right? Are they, do they owe Bank of America, Chase? They owe a lot of money. That's a company I don't know if I feel so confident about, right? And so those fundamentals, again, are some things that you have to look at. Cash flow, for me, I think that's the number one thing I look at is cash flow. The number two thing, are they profitable, right? And then the third thing for me, again, just kind of going in an area of threes, is definitely their debt, right? And thinking out about how soon is that debt? Is that current debt in the next 12 months, or is that long-term debt?
Yeah, no, and that makes sense. Like, just even biblically, like, about, not being a borrower but being a lender, and seeing like, are these companies, are they they borrow a lot of money to keep things going, or are they making money and they got surplus and they making the right moves financially? Because think about, like, us people being on a budget. We talked about that last episode, being in a budget. Are you in a surplus or a deficit? Same thing with businesses. Are they in a surplus or in a deficit? And that can be a big factor on whether or not something you want to invest in.
Yeah, and I think, Rube, to that point too, some companies, some industries, you have to get out more loans, right?
Yeah.
So you got to also factor that in as well. As like, first thing before you invest into a company, what do they do? If you can't answer that question, don't invest in them. You're right. So you got to understand what the company does, and then you got to talk about the fundamentals of their business, the cash flow, the debt, all that type of stuff.
Word.
And it kind of brought me to a question for some people who may be looking to invest in, some high potential growth companies who may not have that track record. So what would be some good ways that you'd evaluate a company that, just dropped IPO, or maybe doesn't have too much skin in the game, but you definitely are interested in putting your money in there? Because it's great to have well-established companies, those blue chips, even the aristocrats, but that value is where you can really, really build wealth, like crazy. So just like you were saying, just imagine if, Ruben, like, if you would have got in when Apple just started back in, in the 90s or so, like, your money, it's astronomical where your money would be right now. And you even hit on the point, Weave, of the fact that iPhone is a tenth of the stock. So people are spending on something that's not bringing them any money 10 times more than if they would have just put the money in something that's going to give them a return. So definitely want to hear about, your thoughts on that, and also, the growth value as well.
Yeah. And one thing too, I'm thinking about even the Air Pros or whatever, the headphones. Those are $140. How much of those cost?
I don't even know. I don't got none.
Yeah,
right.
I mean, that's more than the stock alone.
The AirPods.
Right? Yeah, the AirPods. Yeah, the iPods. I don't even know what they call these days. But no, Sam, I think about growth, right? So I think of something like Virgin Galactic, right? We are not going to space anytime soon, right? But I think that's a stock that the more positive news comes out, it's going to be more volatile, right? And so I think, to answer your question about growth and how I look at that, I think the number one thing is diversification, right? You can never be overweight in one area of your portfolio, right? So, I'm in the crypto space. There are days when I wake up and I'm like, how much did I just lose? Like, man, I lost that much. Oof. I'm gonna look next week. I'm not gonna check anymore, right? And so I think for me, the growth stocks, you have to weigh that against your portfolio, and you have to be diversified in nature. You cannot have all your eggs in one basket, right? And so I look at a company like Virgin Galactic, I realize, again, buy low, sell high. They just had a nice run up off the news that, one, they can take passengers to the moon. Again, that's not anything going to happen next quarter, this year, next year, right? But the stock, I think it ran up, 40%, something like that?
I got in on that too.
I loved it.
Yeah, I got it. Yeah,
I was in it. I've been in it for a while.
For the people watching, really quick, for the people watching, I'll put that on the story too. So if you missed out on it, I was actually giving out that dope. So if you missed the move, like, you missed it.
And that's the thing too, like, because I got in that a while ago when it was at around, I want to say it was like 17 a share, something like that. And now it's like, I'm looking at, where do I need to exit at? I had an exit strategy, but it's like, you know what I'm saying? Like, all right, where's a good spot? But for me, but that's the thing, for me in my trading plan, that was a trade. It wasn't an investment. It was a trade for me. So, the people that don't know the difference between trading and investing, I think we talked about that episode 1 or 2.
Yeah, we did, but I definitely, for those that, weren't on that call, I definitely think that they should, hear it again type.
Yeah. So pretty much when you're talking about trading and investing, people, if you're not familiar with those terms, you just think they're the same thing, which, someone could argue they are the same, but they're not. So investing is something that you're going to hold on to 10, 15, 20 years later on down the line. It's something that you're going to buy and hold. You hear that a lot. Or keep, dollar cost averaging into over the long run. You're not looking to get out. It's something you're looking to put your money in and get that value. Trading is more so short term, maybe a week, maybe a month, maybe even a year. You get in something and let it do its thing, and you're getting out. It's not something you're holding for the long term. So it's important to have that distinction when you're buying and selling stocks in the market.
And one more thing too, Rube, on that, the exit strategy, right? Yeah. And so you think about someone who's trading, that exit strategy is whenever I see green, I may pop out. Whereas when you're investing, your exit strategy is a very long, structured plan over a long period of time. I think that's a great thing to think about. Whether you're a new investor or older investor, you have to have that exit strategy and also think about, am I trading something? Am I trading Virgin Galactic? Or am I investing in Virgin Galactic? Because those are two stark differences in looking at that stock.
And hey, Colin, I ain't gonna get into it, but the reason I'm trading Virgin Galactic is because, I don't know if we've been to the moon. I don't even know, you know what I'm saying?
all I know is Elon Musk is behind it, and that man controls the stock market with his mouth. So
man.
I have faith in him to do some numbers with it. Man, well, Larry June would say numbers.
Numbers, man. Numbers.
Nah, yeah. You got something, Colin? You got a question?
I just kind of want to circle back to a point that we've made, and I believe we talked about it on. I don't know if we were on the episode or if we were just chatting about it, but knowing what you do on a daily basis and just knowing what a company does. It's kind of simple, and I said it to Ruben and Sam. It's simple. If you can go ask a stranger, is McDonald's a good company? Yeah. They're going to tell you McDonald's is a great company. They've done business for years. It's obvious that they're profitable. They're not in much debt. You don't hear them, owing people money. You don't hear about it. Same thing with Apple, Microsoft, a lot of these other companies. You can ask a stranger on the street, is it a good company? And they'll tell you, yes, it's a great company. Okay, let me take my money. I'm going to say invest it. I can put my money there and not have to worry about it. Leave it there for years, and that growth will come back. So I really like that point. I just wanted to reiterate that. So anybody looking to invest, get into those companies that you know for a fact that they've done great for years. You can get in now, even if it's not the greatest entry point, because that company is going to have growth. So go ahead and get into it. Don't wait. It's going to give you some type of positive return.
No, definitely. And I was going to
say, that's a good point, man.
Yeah, I was going to say too, like, for a lot of people too, realizing like a lot of these companies they are what they are, but they aren't what they advertise as they are. So for example, like McDonald's, you think fast food industry, but really they real estate. think about how many McDonald's you see driving up the street, or if you're in another city, you see McDonald's everywhere because they got them everywhere. It's real estate. They buying land. Domino's, tech, you know what I'm saying? They got the pizza tracker and all this other stuff with pizza. Yeah, they sell pizza, but you got to look and see, like, what are they actually doing? Like, those are just two off the top of my head I can think of, but like knowing.
Speaking of Domino's, they do something extremely interesting and that's very creative across as far as like something that a company does. Going and paving over potholes.
Mm-hmm.
That is, talk about a business move.
Nah, for real.
Man,
I'm delivering this pizza. I hit a pothole. The pizza's ruined. The customer's not paying for it. So let's get ahead of the game.
Yeah.
Let's get ahead of it.
It's genius.
Yep.
Man,
It's genius,
even I was in a spot where I was, man, this is some years back, but I was working at Papa John's, you know what I'm saying? And this is when, you know, that news had just got out about, you know, Papa saying that word, you know what I mean?
Yeah.
And not too long afterwards, they took him off the box. Like 1 week, we just had a brand new shipment of boxes, took him off the box. Shaq became the CEO, and now you see some 7'8" dude talking about Papa John's.
Man.
You know, like, it's crazy because that's like you start to see that's kind of like the shift. Like, it's crazy how innovative people are and how the game just always changes. Like, I even saw something today where Blueface is fighting some dude who's big on Instagram. So you're starting to see the game really change, like, all across the board. Like, I read Rich Dad Poor Dad. If you haven't read it, please go read it. Great first book. Great first book to kind of set that basis and get you thinking out of the box. But it even talks about how McDonald's is in the real estate sector. You know, McDonald's sells real estate. They don't sell burgers.
Facts.
You know, because as a franchise, and this is the key, this is a quick little gem. A franchise isn't really focused on selling the product that the franchise is claiming to sell. They're claiming the rights to sell whatever they're selling. So McDonald's isn't just selling the burger, the Big Mac, the McRib, even that Scott meal. They're selling the idea to sell those things to other people. And that's where the real money is. And it's not just like there's levels to it. Like that's the easiest way you can say there's always levels to it. You just got to be aware of it.
Yeah, and Sam, that's what I was gonna jump in there with when Rube was talking about McDonald's. It's genius, right? So people think McDonald's quick service restaurant. No, all real estate. Look at their balance sheet. They're asset light because all they own is land, right? They don't own nothing else in the building. They're giving, you know, these franchise owners the business, right? Here's McDonald's, the brand. You go sell the brand. We simply own the property, right? And you give us the initial startup fee to even be a franchise, right?
Boy,
finesse. You get a portion of the profits, right? It's such a genius play. And it's, man, I think it's where more companies are going. I think we talk about it, Rube. I think real estate is one area we have to be more involved in, more invested in, right? In Atlanta, real estate is going up left and right? It's that land, but it's also, you can do so much with land, whether it's housing, quick service restaurants, right? Retail properties. So I think there's a lot of avenues to go when you get into the real estate game. But McDonald's that's a business segment and a business story of success for, I think, everybody to learn from, right? Like you have to understand the McDonald's story. And then about Shaq, I was going to talk about Shaq really quickly. I mean, he's probably one of the greatest entrepreneurs of our lifetime, right? Papa John's, right? He's involved with the General for insurance, right? The car insurance spot. And then he's also doing Krispy Kremes, right? So there's a lot of streams of income that he has coming in, not just one. So they're kind of going back to one of the earlier points.
Yeah. And speaking about, you know, McDonald's and Krispy Kreme and all this stuff, you know, I'm gonna ask you about this, but just talking about, you know, making that transition to eating a little more healthy and, you know, doing those things. I know we talked about the CMOS and, you know, fruits and stuff in the morning. Just talk about how that kind of can help you elevate your mindset as far as taking care of yourself so that you can go do those extra things as far as investing or looking into real estate and just how that correlates.
Yeah. Look, early bird gets the word, right? And so I remember back in college, man, y'all know I got a sweet tooth for sweet tea, right? Growing up down here in Atlanta, I got family in Florida, Alabama, all over the South, and sweet tea is like, that's our holy water, right? And graduating, kind of going to college, realizing you can't drink sweet tea and perform, in your body. But now getting out in the real world, I can't drink sweet tea, go to sleep, and wake up early, right? If the food that you consume makes you tired, that's the wrong food, right? That's not the nutritional things that we need in our body. Food is supposed to give us energy, right? Gives us life, helps our skin, things like that, right? So, for me, I think about breakfast. Every day, Ruben got on me about this, but every day getting up, drinking water, and getting fruit before I have my coffee, right? I drink probably 16 ounces of black coffee every day because I like coffee. But I think for me, it's like when I first get up, I get my body water, I get my body fruit, right? When I go to bed every single night, I got this 40-ounce jug right here. I drink no less than 3 of these every single day, right? And so I think that's giving me more energy, one, in the morning, but now I'm up earlier. Now I get a earlier start on looking at a company or looking at the stock market, whether it's futures, you name it.
Yeah.
So I think that fuels my body, right? And I think the other thing too I was gonna say is 3 years ago, I gave up on meat, right? And so I've added back in seafood. I know that it's not the greatest thing, but I'm weaning off of that, right? So I only have meat twice out of the week now. 2 days out of 7 days, I have meat. I'm trying to work myself off of that. I'm cutting out dairy. So I think all those things, I say all that, it's helped me not just from a financial standpoint with be able to have more energy to do my research and actually obtain financial knowledge, but it's also, and more importantly, giving me the energy, to play with my dog, to go with my nieces, to now get up and go work out. I'm in the gym 6:15 Monday, Wednesday, Friday, and on Sunday at Orange Theory, right? So I think all those things together play a part, and they're all connected as well.
Yeah, I think we often fail to realize that our body only has a certain amount of energy that it's able to distribute across different areas of our life, right? Like, especially in the lifestyle that most of us are living. We wake up, and from the time we wake up, we're on the go. It's either work, it's trying to invest, trying to figure out these different things to do. We're constantly on the go, on the go, on the go. It's like, where are we able to really focus our energy if we have the energy? So we have to do everything that we can do to make sure that we're taking control of those different aspects of our life. And then now we can get the most out of those things that we're doing, right? So just because I'm eating right, not only am I going to have more energy, but now I'm able to have that clear mind when I'm investing and when I'm looking at my trades, or even when you're just at your job, you're able to perform better because now you're taking care of yourself. You're able to give more. So, I mean, that's a whole nother episode, and we can really dive deep into that one.
No, it is for sure. And I was gonna say too, man, like we talked about that last episode about, how can I find time to invest or look up these companies or, work out or, spend more time with whoever. But like we were saying, you eat right, you start taking care of yourself. Now you can add a little more hours to your day. You can wake up at 5 o'clock and be ready to go, be jump started. You're getting to bed, on time. You're not staying up till 3, 4 a.m. having to do stuff because you're getting those hours on the front end. I can't remember who said it, but the quote was, the people that build wealth, they get up early and go to bed early, not vice versa. So I know it's, depending on, how you are, you might be a night owl, that's fine. But at the same time, knowing that, if you can get that jump start to your day, it can propel you to, kind of be more active, more intentional and more engaged into what you're doing throughout the day. So that's big. That's why I brought that up, because I know you went through that transition weave, and I know it's working for you.
Yeah. I probably lost, sheesh, if I really think about it, I mean, I was 290 at my heaviest in college, right? And that's a diet full of brisket, ribs,
Cowan.
Cowan, right?
Miss
Like a
Miss
lot of
Charlotte.
Cowan, Miss Charlotte, yeah,
You want
a
one or
lot
two,
of
baby?
you have 1 or 2, baby, yeah, a
Boy.
lot of grill visits, man, like and it's a growth, right? I think it's all about growth too, is realizing that like I would have never made the decisions that I've made health wise today if I didn't go to center, right? If I didn't have those Cowan experiences, if your feet are swelling from the food you are eating the wrong food, right?
Mm-hmm.
And so I think a lot of ways we have to look at how does this food make our bodies feel? Kind of going back to the Cohen's point. If that food makes you feel groggy in the morning, makes you feel tired, you can't get up, your feet swollen, it's not the right food, right? You have to really look at your diet. Too much salt, too much sugar. What are the things that are going to help us, right? The average lifespan is 73, right? Something like that.
Yeah.
I'm trying to live till 80. So yeah, I'm gonna go work out. Yeah, I'm gonna drink my water. Yeah, I'm gonna eat my fruit, right? Because that means more time, which if we can really talk about it, our only true asset is time, right? Whether it's time in the market, whether that's time with your family, time is our one true asset. And so we got to do better about kind of maximizing our time in the right ways.
Yep. Now that's big. You say that because stock market, other asset classes, the reason people do that is to buy back their time. That's why we talked about that last episode, the why behind wealth. Like it's not the $1 million you want, it's what comes with the $1 million. Do what you want when you want to do it, whenever.
Right.
You know what I'm saying? You got that freedom to be where you want, do what you want, and you're free.
Right. Yeah. So a lot of ways, man. We all gotta do better, man, but we gotta realize, man, time is our one true asset, and time in the market is better than trying to time the market, right? Patience is a virtue, right? But the more time we have in the marketplace, the more time your money can grow, compound interest, things like that, man, you'll be in a much better spot financially.
No, yeah, definitely. I had one more question if y'all don't have any. I had one more I want to ask you.
Yeah.
Y'all got any questions? Okay. So just with everything that's going on today, with the economic system that we're living in, interest rates low, where do you see the economy in this country going in the future? Just with a lot of speculation going on, a lot of we got cryptos, we got meme stocks, and people pouring thousands, millions into these unheard of things, these new things. What do you think about the future of this economy going forward with all that happening?
Yeah, there's a couple ways to kind of chop that answer up. I think you got to go by quarter, you got to go by year, and then really 3 to 5, maybe 3 to 10, right? So we look at the quarter. Vaccine numbers are up, right? People are returning to work and are going back out. So I think the economy is going to boom for at least the next, let's call it 3-4 months, right? And so we're talking about solely stock plays, like I think Delta, right? Hartsfield Jackson's down here. Sam, you know this, man. Like there are 2-hour lines to get on an airplane.
Dude,
right? So when I think about it, like,
oh man, it was ridiculous, bro. Like I sat there and waited to pick her up for like an hour. You know what I mean? Yeah. So yeah, Hartsfield's been going crazy, like crazy.
Right. So I think about, okay, when Delta reports their next quarterly earnings, think about the comparison to this time last year. Who was on a plane last June, July, August? And so in my mind, I think a couple of things. They're going to certainly show a much better quarter than last year, right? They're going to show signs of recovery just from January through June, right? And of course, to some extent, they're going to be profitable. You think about this whole thing about unemployment and there's not enough folks, going back into the office or going back to their jobs. That means they have a number crunch, right? they know that if I bring on Sam as an employee, I'm going to be profitable, right? They would only welcome you back knowing whatever your salary is, I'm gonna make more money than what I have to pay you, right? And so for me, the next quarter, a play like Delta, a reopening play, right? It makes sense. I'm gonna say this, and I hope everyone listens to me on this. Electric vehicles and the respective infrastructure. You cannot have an electric vehicle without a charging station, right?
We talked about that.
So there's two ways to address the EV market. It's the manufacturers of the EV, of the electric vehicle. And then there's also those who are going to build the infrastructure for you to charge your vehicle at a Walmart, at a Whole Foods, at a BP, wherever, right? Your traditional gas stations. So to me, that's more of a quarterly, really kind of end of this year, kind of next year play is the EV space. And I say EV space, that includes the infrastructure, right? You know, Ruben's going to hate for me saying this. Crypto. I call it the token economy. You know, there is a global war brewing between China and the US, right? Whether it's the cyber warfare, right? We all know about ransomware, all that type of stuff. But also the dollar, right? A lot of people don't know this, but China has their own digital currency that's state-backed, right? And so I think there's going to be a battle brewing in the cryptocurrency token economy as well. And so I think, you know, that's just the quarterly. I think Delta's a play. There's a couple of other plays. I think just Delta, for example. If we get another stimulus check, Dollar Tree, Dollar General, they're going to do numbers. Target, Home Depot, right? They're all going to benefit. I know where I live here in Atlanta, when COVID first happened, and I missed a play. Let me go and say this now. I missed a play. I drove by Lowe's every single day on my way to the gym, bro. And this Lowe's line, I mean, longer than a football field. To go into Lowe's,
man.
You know, people are at home. When you're at home, you don't just sit around, right? You got all these DIY projects, and so Lowe's and Home Depot, I think, will continue to benefit, whether it's through the reopening play or if it were to shut back down again in the near future.
Nah, that's a lot to take in, but I hope they listen to that, because you was dropping some gems on that one, bro, for real.
Yeah. And the
Free
last
game.
one, you know, free game, man. Free game, right? The last one I'll probably say too, and it goes back to what we were talking about, real estate, right? And so there's a lot of ways to address real estate, but the one thing that I'll tell people, two things, right? I'll give you a little gem right quick. So if you look at real estate, every property, right? No matter it's in the hood, it's in metropolitan area, they're categorized in three ways, right? So it's Class A, Class B, and Class C property. This is all commercial real estate, not residential. This is commercial. So you think about, okay, going back into the office, who's going to want the most space and be able to pay the most space, right? So a Class C property is bottom of the barrel, right? Probably no technology in there. You in cubes. Nobody's buying that, right? Past COVID, right? Or after COVID. Class B properties, kind of in the middle, right? You have some, you know, room to develop your technology in your space, but again, not a lot of room to give 6 feet for social distancing and or hire more employees. And so one play I'm looking at is Class A properties. I'm looking at REITs, real estate investment trusts, that primarily focus on one, Class A commercial properties, and two, I definitely want some mall and restaurant REITs as well. And so a couple plays I'll throw out there. Simon Property Group.
I was going to say that SPG.
SPG, Simon Property Group. And then there's one called Four Corners Property Trust. Everyone knows about Olive Garden, Red Lobster. What else in their portfolio? There's a couple of, is it not Jimmy John's? It's They got a couple of quick service restaurants, but I know Olive
Mhm.
Garden's in their portfolio. That's another one you got to look at, right? And so I think REITs, we talk about quick service restaurants with McDonald's, right? And how they the best of both worlds. They're not the only one. They won't be the last one. So I think that's, we can talk about McDonald's all the time, but as we know, history repeats itself. There are going to be more companies like McDonald's that see just the Wendy's, for example, another one, big franchisee, heavy QSR. They are going that route, right? So definitely looking at those companies a little bit further.
And they just had a big play a couple weeks ago. I was eyeing it. They had a huge man. They had a crazy move, and quick little look. For the viewers, definitely be on the lookout because it's back at the level it broke from. So Wendy's might even be actually a good play to look out for. Fairly soon. So yeah, definitely saw that on the technical side of things.
Educational and entertainment purposes only.
If you can get a 4 for 4, make it a 4 for 5. I'm gonna get you a stock too.
Oh man!
No,
hey, CB Wild.
No, that was a lot of good stuff. Let's move forward to a portion we like to do every show called the refill, right? So the refill is where we like to take a quick recap and each of us we're gonna go over something that really stood out to us that it really has our cup overflowing. We don't want the viewers and our listeners to miss this point. So Ruben, I'll start with you. What's your refill for the day?
Yeah, man. So something we've hit on talking about, different companies and different stocks. The quote he said was stocks fall for a reason. So that GE play he invested in college, always cheap, it should go to 100, but not understanding the fundamentals and knowing that some of these companies are cheap for a reason, and you have to make sure you don't miss that. If it's if you're throwing $1,000 into it, or you're throwing 10 G's into it, really doing your due diligence and understanding, like, all right, why is this company at $10? All right, why is this company at $20? If it's something that's, that you can kind of, all right, I'll still invest into it, then, go right ahead. But if it's something, oh, they got trillions of dollars of debt, like, ooh, I'm staying away. Like being able to see that and not just think, oh, it's cheap, it's low, buy low, sell high. You might buy low and it ain't going nowhere. So just being diligent in your research and understand what's going on. I think that was big. And you said that.
Definitely, Sam.
Yeah, I would say for me, the thing that really stuck out to me was just making sure that you understand where you're at and where you need to be, because you really are one paycheck away if you're only relying on your job. Because let's say, for example, I always tell people, let's say, you love your job, you love your career, you love your coworkers, you love your boss, but let's say they get a $7 billion, offer on the company tomorrow, and people that bought out the company have their own team, have their own people they want to bring in, and now you're looking for a job. So it's just good to have those other streams that can keep you afloat during a time like that, if you did need to go look for another job or career. But just making sure that you can have that time freedom, like Ruben always harping on, and you can help people and just live a life more abundantly. So making sure that you understand that one paycheck should be making you more paychecks, and your money should be working for you. And that money having a job is real key. So that was definitely my point that I appreciate you harping on.
And for myself, the point that stood out the most to me was your experience in the investment club and making that initial investment. There is a typical and there's a stereotype of investing that you can make a lot of money fast and you can lose a lot of money fast. But at some point you have to start, right? You have to take that leap of faith. You have to get into it. Otherwise, you never really know. You can do all the studying that you want to. You can study it. You can have all your notes written down, get ready to go in and invest, make a trade. But there's nothing like actually putting your money into the market. Whether you make money, whether you lose money after that, all of those are lessons. We don't want to call it a loss because it's not really a loss, especially in the stock market, until you sell it. Right. So make that initial investment. And I'm telling y'all, I hope y'all took notes, because we've gave y'all a whole lot of initial investments that there are some potential to. So I hope y'all were listening, and don't be afraid to take that leap, right? You got to start somewhere. If you lose money, you got something to learn from, and you'll remember that down the road. You'll know what happened with that company, with that play that you made, and now you can utilize and apply that to a different area. So I really hope that, you know, people were taking notes on that. Tons of good things that were said during today's episode. If you missed it, please go on YouTube, rewind the podcast. It's your fault at this point. We poured the water in the cup. It's all out there.
We filled it up, man.
It's all out there.
We've got your cup running over right now.
Yeah. And I was gonna say, you got any final words for the people?
Man, I would say, man, just what has me full, man, is just that financial confidence, man. I think Colin talked about it. I think, you know, whether you're investing $100, $1,000, $100,000, take that first step, right? You only learn to walk from crawling, right? And you don't learn to run from walking, right? And so take those baby steps, right? Whether it's $10, $50, whatever that initial investment is. And once you have that financial confidence, you have the financial knowledge, and then sooner rather than later, time is your only asset, you'll have financial wealth. And so, man, I want to say thank y'all again, man, for bringing me on. Man, CRO, man, I'm tapping in. I'm ready to see the next episode, see where things go, who the next guest is. And the one thing for me, man, I need some merch, man. Next time I need to be out here with some merch. So, man, thank y'all boys again, man. Y'all stay up, man, and let's definitely continue to kind of change, you know, our generations, man. I'm excited to, you know, to build for the next generation, which we all should be doing. So thank y'all again. You know, I can't thank y'all enough. And yeah, let's get to it. Let's get
yes, sir. I'm about to say, yeah, we definitely want to have you back at some point, check back in with you. But we'll definitely talk offline as well, because you always bring a good perspective, and, you know, all praise to the Most High for building that relationship back in the days in college. So, you know, we'll definitely keep it rolling. But if y'all don't got anything else, you know, we'll sign it off.
No doubt. Hey, make sure you all rate the podcast, leave us some comments. Make sure you like and subscribe to the channel on YouTube. And we love giving you all this information. It means nothing if you all aren't receiving it. We're glad y'all joined us again.
Yes, sir.
Appreciate y'all.
Y'all be easy.
Rob, all that, man. Y'all be easy. Check out the Instagram, and y'all be blessed, all right?